Hey, everyone! Welcome back to the channel, where we explore different issues hitting the headlines. If you've been watching the markets lately, you know UnitedHealth Group, ticker symbol UNH, has been in trouble. This is the largest health insurer in the United States, a giant in the industry, but 2025 has been brutal for them. We're talking about a share price that's fallen nearly 46% this year, investigations piling up, leadership drama, and plenty of headlines you don't want as a public company. And then, out of nowhere, a single filing with the SEC changes the conversation. This filing revealed that Berkshire Hathaway, the company Warren Buffett runs, quietly bought more than 5 million shares of UnitedHealth. That's about $1.6 billion worth of stock. It's a huge vote of confidence, and it set off what traders call the Buffett effect. The moment news broke, UNH stock shot up almost 12% in early trading. And it wasn't just the jump that caught people's attention, it was the shift in mood. A company that had been the definition of a falling knife suddenly looked like a potential comeback story. But here's the interesting part. Nothing about UnitedHealth's business changed overnight. The investigations from the Department of Justice into its Medicare Advantage billing practices? Still ongoing. The leadership shuffle where CEO Sir Andrew Whitty stepped down and former CEO Stephen Hemsley stepped in as interim? Still in place. Rising operational costs from patient claims, cyber attacks, and system disruptions? Still a major problem. Yet, Buffett's name on a shareholder list was enough to move billions of dollars in market value in a matter of hours. That's the power of market psychology. Warren Buffett is known for buying when others are fearful, for seeing value where most investors only see trouble. So, when Berkshire takes a position, people assume the worst might be behind a company, or at least that its current price is a bargain for the long haul. In UnitedHealth's case, the market had punished the stock so much that any good news, especially news with Buffett's name on it, was going to hit hard. But we have to be realistic here. The challenges facing UnitedHealth aren't just about investor sentiment. The Department of Justice probes could lead to fines, new regulations, or stricter oversight of its billing practices. Operational costs are not showing signs of cooling off in the short term, and rebuilding trust with investors takes time. Buffett's purchase doesn't erase those problems. What it does is tell us that Berkshire believes the company's long-term value outweighs the short-term pain. And that's where the market is divided. Some investors are already calling this a buy-the-dip opportunity, saying the stock could be worth significantly more in a few years if UnitedHealth cleans up its issues. Others think the rally is just a sugar high, a temporary reaction to the Buffett effect that could fade once reality sets in. Now here's something to think about. The Buffett effect works both ways. It can drive enthusiasm, but it also creates pressure. Once his name is attached to a stock, there's a spotlight on every move the company makes. Analysts will be watching quarterly results more closely, every earnings call will be scrutinized, and the media will be ready to frame every setback as a blow to Buffett's judgment. That attention can be a double-edged sword. If UnitedHealth can turn things around, if it can resolve the DOJ probes, stabilize leadership, and bring costs under control, Buffett's stake will look like a masterstroke. The stock could recover its losses, and then some. But if those problems drag on or get worse, the market might not be so forgiving, and even Buffett's backing might not be enough to stop further declines. The truth is, investing isn't just about numbers on a balance sheet, it's about narrative. The UnitedHealth story for most of this year has been one of decline, scandal, and uncertainty. Today's story is about confidence, patience, and the possibility of a turnaround. Which one will define the next chapter? That's what investors have to decide. So, as you watch this unfold, remember this. The market loves a redemption story, but it also has a short memory when the numbers don't match the hype. Right now, UnitedHealth has been given a rare gift, a second chance to reset the conversation. And for long-term investors, that's where the real question lies, not just what the price is today, but what it could be 5 or 10 years from now. Thanks for watching, and if you found this breakdown useful, make sure you hit that like button, subscribe to the channel, and turn on notifications so you never miss an update on the market's biggest stories. I'll see you in the next one.